Artificial intelligence will change our lives, and until now, investors only had to buy shares of Nvidia to enjoy the upside, a 900% return in just 2 years. But down 12% since the peak, and at $3 trillion market cap, investors can no longer rely on Nvidia for that 10x AI returns. For the semiconductor giant to produce that same 900% return again, it would have to grow to a $27 trillion valuation, almost as big as the entire US economy, and larger than the largest 20 companies in the United States combined. There is one group of stocks, though, that can produce that 9 and even 10 or 20 times return on your money over the next 5 years. Penny stocks of companies using AI to revolutionize our lives. The 7 stocks I'll highlight have an average market value of just $545 million, meaning they could 10x your money and still be smaller than any stock in the S&P 500 with more room to grow. Let's get started on our list with Inuvo Inc., ticker INUV, at just 26 cents a share. But stick around and I'll reveal a critical rule to investing in penny stocks of AI companies. Inuvo is on the forefront of one of the first use cases for enterprise AI, marketing and advertising. Klarna made headlines last month reporting $10 million in annual savings to its marketing budget from the use of just AI alone. Inuvo built its intent key language models off of over 110 billion pages of content to understand consumer interests and intent to better match advertising. It's a real-time advertising tool that doesn't rely on cookies and hopes to grab a piece of the $298 billion US digital ad spend every year. The company booked 20% annual revenue growth in the last quarter and has a strong balance sheet with $4 million in cash and no debt. Forecasts are for an average 22% sales growth this year and next, with the loss per share narrowing to just 1 penny. And next, the largest company on the list, I highlighted Pagaya Technologies, ticker PGY, recently as an AI fintech stock to watch. The company uses artificial intelligence and credit risk and analysis for consumer loans, auto loans, and other products to predict customer behavior more accurately and to lower defaults. That allows partners like SoFi, Klarna, and US Bank to assess loans faster and approve more loans. That is a leaner business model than other fintechs running their own lending platforms. Instead, Pagaya uses its AI model through partner lenders for their loan process. With this, Pagaya limits a lot of the operational expenses like running and marketing its own platform. That frees the company up to focus on adding lending partners and save on consumer marketing. Revenue is expected up 29% this year and 17% next, and unlike a lot of the other penny stocks you're going to see, profitability is within reach. Net income is expected to reach 37 cents per share next year, and the company is already EBITDA profitable. We'll get back to that list of penny stocks to buy, but if you want to see the 5 stocks I'm buying right now for the next 30 years, my forever stocks, look for the link I'll leave in the description below. It's a free report I put together with the Motley Fool, some of the biggest stocks in my portfolio. These are the stocks I'm following in major multi-year themes, with one of the picks up 100% and the group up an average 94% last year alone. That report is totally free. You're going to see the first stock immediately, and they'll email you the full report with the other stocks. It's an easy way to support the Let's Talk Money community and see some of my favorite stocks to buy, so look for that link in the description or just click the QR code here. I hate the name of this next one, but Perfect Corporation, ticker PERF, at $222 million market cap is definitely one to watch. Naming your AI beauty company Perfect just seems a little on the nose, but pun intended, what it's doing does perfectly match the influencer era of the industry. The company serves the enterprise market with a software-as-a-service model, helping a business's customers try on products before they buy. Perfect also serves the consumer market directly with its mobile apps and generative AI features for makeup, hair, nails, and fashion. The model supports 90,000 skin tones and more than 10 makeup textures, taking nearly 4,000 point references on a person's face. Beauty and makeup has become an influencer-driven social industry, and the model here has so many other use cases. With users to the mobile app growing 30% to 900,000 over the last year, Perfect reported 18% year-over-year revenue growth in the first quarter to $14 million and $54 million in the last year, and has guided to 15% sales growth this year to $61 million. It's not super high growth, but consistent, and there is a huge market for this company that's ready for AI. Better still, the company is already net income and cash flow positive. BigBear.ai, ticker BBAI, has seen brief jumps in the shares when investors swarm into AI stocks, but has given back those gains. Now that does tell me a lot of the sentiment for the stock depends on that AI theme, and the company hasn't quite yet convinced investors it has that competitive advantage in its model. That said, Big Bear is in one of my favorite themes within AI, helping companies make sense of all that overload in data. They help companies organize and visualize raw data to turn it into actionable insights. Because this is key and really the first step in AI, just managing all the data collected and then being able to make sense of it. That's helped BigBear grow its customer base and a $206 million backlog for revenue. It's also produced some major wins recently, including exclusivity with L3Harris and a $32 million award across 3 contracts with the U.S. Army, a relationship that has grown 235% in the last 3 years. Again, BigBear still has some work to do to impress investors. The company reported just 0.5% revenue growth in the fourth quarter to $40 million, though it was able to boost its gross profitability to 32% over the quarter. The company was able to report a positive EBITDA of $3.7 million on a non-GAAP basis versus a loss of $2.5 million last year, so it is definitely moving in the right direction. Earnings here are expected negative through next year, but with a 20% average revenue growth, and this one is trading at an attractive valuation at just 1.6 times sales. We're coming up on 3 AI penny stocks that you will not want to miss, but there is a problem with these that we don't always have with other penny stocks, and it leads to more risk for investors. The problem with these small AI companies, or really just about any AI stock that isn't one of the mega cap companies like Google or Microsoft, is the breadth of competition and uncertainty for who's going to create that killer app. You see, with artificial intelligence still in its infancy, there are so many private companies as well as publicly traded stocks, all pouring millions, billions of dollars into research and development to innovate that breakthrough use case. And that creates a lot of uncertainty for who is eventually going to be successful, and with investing, uncertainty means risk. Now, we have talked about creating a penny stock portfolio in the past. The idea that these micro-cap companies are just starting out are the riskiest of the risky for investors. You need to spread that risk around at least 10 penny stocks. Now, as with venture capital, more than half the stocks are going to go nowhere or bust completely, but even if 3 or 5 of them go 10, 20, or 30 times your money, you've got a hell of a portfolio return. And that's especially true for these AI penny stocks, and you might look for 10 to 15 stocks to spread that risk out even further. Here also, you're going to need to give those companies time to develop their AI use cases and open up the market. Other than a few headline cases like these, the use cases for AI are still developing very slowly. Even a company with that killer app is going to need time to develop its market and grow revenue, so plan on holding your AI stocks for at least 3 years. At just over $1.1 billion market cap, Lemonade Inc., ticker LMND, doesn't quite meet our size criteria for a penny stock, but it's very close and still has that penny stock growth that we're looking for. Launched in 2015 with a specific intent to disrupt the traditional model of insurance for the 21st century, Lemonade uses AI throughout its model, from its virtual assistant AI Maya that collects information and guides customers through a quote, to AI Jim, its claims algorithm, and another CX.ai that handles customer support. From there, several systems are also used in the back office efficiency and platform management and fraud protection. Bigger than a lot of the others on our list, Lemonade still brings the growth, with premiums up 22% from a year ago, nearly 10 times the industry average growth rate. Key here is the efficiency brought by its AI model, seen here in the loss adjustment expense ratio, or LAE, which that's the claims loss expenses divided by gross earned premiums, and really a core operational efficiency metric for insurers. Lemonade has been able to consistently lower its LAE, now down to 7.6%, well under the benchmark of 10%, even for those large insurers. The one thing that worries me about the company is it is still far from profitable, though it is expected to narrow that net income loss to $2.40 a share next year. It does have a healthy $285 million in balance sheet cash, and that revenue growth will help, but this one still has a long way to grow. Up next, Lantronix, ticker LTRX, reached cash flow profitability last year and is a strong player in the IoT theme driven by AI. The company operates in 3 core areas of software as a service, value added, and hardware to industrial users, and could be expandable into other customer verticals. Weaker revenue growth over the 2022 and 23 period is starting to turn. I really like the profitability story here. Management is forecasting at least 18% revenue growth this year, along with 50% growth in earnings per share. What I like most about Lantronix is it's reached cash flow positive on an operational basis last year and blew past it over the last 12 months, generating nearly $20 million in free cash flow. With continued growth, it should dig out of this recent investor disappointment and take the stock price higher. I have 6,000 shares and more than $30,000 in this next penny stock, but don't just load up your portfolio with AI stocks. Check out this video for the 5 penny stocks beating the Rule of 40, my favorite measure for success when working as a venture capital analyst. Using this rule helped me find startups and stocks with the perfect balance between growth and profits. I've been following SoundHound AI, ticker SOUN, since recommending it at $3.70 a share in February. It shot up past $8 a share on an investment from Nvidia into the company, but has since come back down into value territory. Now, like Lemonade, this one is just outside that penny stock size at $1.3 billion market cap, but I think there is still a lot of upside growth here, so I wanted to highlight it. SoundHound is a leader in conversational AI to businesses that can be used to build AI assistants in more than 25 languages. And that market for AI assistants could be ginormous, even larger than the $160 billion enterprise market SoundHound estimates here. SoundHound's competitive advantage could be in its ability to reach a deeper meaning faster in its program. The AI combines the automatic speech recognition, or ASR, with natural language understanding, NLU, steps in a typical voice AI software into just one step to understand the context of conversations in real time. All that is backed up by a patent library of more than 260 patents through speech recognition, natural language processing, and machine learning. The shares were up 17% last year and surged 150% in the first 2 months of this year when Nvidia reported a $3.7 million investment into the company, sending the stock up 67% in a single day. Now, that was followed quickly by a disappointing earnings report where, while SoundHound did report 47% growth in revenue and a net loss that almost halved, it did miss earnings forecast by 8%, and the outlook for 39% revenue growth going forward was also below estimates. But rather than any fundamental issues with the company, I think this one is just one of those readjustments that fast growth stocks have to go through from time to time. Wall Street and investors get ahead of themselves and get disappointed, sending shares crashing but really creating a buying opportunity for braver, long-term investors. Forecasted growth is the highest on this list, and that investment by Nvidia is a huge vote of confidence in this AI stock. Get your free report and see the stocks I'm buying for the next 30 years, my forever stocks, up an average 94% last year alone. Or click on the video to the right for the 5 penny stocks beating my favorite measure for stocks to buy. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.